we'll go over last week on indices. This was another one where I was going into this expecting, or not really expecting, but knowing that there's some potential for some more crazy news to hit the market like it did. So that kind of took away from other markets. So I don't really have anything to talk about outside of indices, just because if they're trading in a way as it was with the news, I'm probably not going to have much focus there. It's really just me working around indices. So I'm going to start by going over what the process looked like from last week. And then we'll move forward from there with any questions that come up along the way. Throw them in the chat and I'll keep an eye on that. But that's what I want to start with. So yeah, last week where we were opening up, focusing on ES and NQ, we had that news driver and then expanding off of that for the following days. And pretty much not much you can do other than let Monday print. And the only relevant level you're going to have is, or the only logic we have is the expansion rule, meaning 3 days of expansion, closing out the week, letting Monday print, and assuming that this trend, of course, there's news events and things like this can happen, but simply technically speaking, expansion rule, let Monday print. We don't expect this trend to immediately continue, so not looking for Monday to start selling off right away, but we're just looking at how price engages in relation to that narrative, but then also previous week low. The economic calendar does slightly play into this, not really relevant for too much, but last week was CPI on Thursday. That was really the only event that mattered much. FOMC meeting minutes from Wednesday, I don't care about. 2 o'clock, it's late in the day. It doesn't really have any impact. Tuesday, there's no news. And then Friday, I would be aware of 8:30 and 10 o'clock if I'm trading on that day, but it's not high impact news, so I don't have any specific protocol around this here. CPI is the only one that I really want to know that's there, because I don't want to trade prior to 8:30, or I don't want to have an open position going through 8:30 with CPI here. High impact news event, so I have my rule Thursday at 8:30. That's like the main one that I really want to know that that's going on. But other than that, it's let Monday print and then see what we can do going forward. And Monday came into the market. Of course, we do expect it to engage previous week low because it's closing right on that, both ES and NQ run into that. And we can mark it out just for the sake of this, but the volatility really did carry over. I wasn't sure if it was going to start a new week, the volatility reset slightly. I knew it would still be elevated, but I didn't know if the news was going to continue like this, but it definitely did. Extremely large range day. We can even see going through the open. I'm not trading this. I have no interest in trading any of this, but more news hitting the market, super volatile. And that really leaves Monday with not really giving me any context in a few ways. If I look off the lows here, Monday opens up. We can even mark out this weekly open, dropping into previous week low, or even gapping through it. But nonetheless, off the lows, we have these failure swings. And once I see failure swings, we're on ES here. I'm going to go right to NQ. We have that same thing. Failure swing, so down to this low, down to this low. Ultimately, this is that relevant swing. And if we're going to trade to the upside, well, we need a protected low. We need some form of manipulation or some form of divergence, which we're lacking. So off the lows, I can say this isn't a valid manipulation of previous week low because there's failure swings here. I can't trade this to the upside. I can look off of Monday's high. And here again, we have not the exact same thing. They're not failure swings, but it's not an established reversal where we're closing that day up here. And we're getting really deep back up into this high. So Monday's low is not an established reversal. Monday's high is not an established reversal. So as long as we remain in between these 2 points, that simply means I can't trade this lower or I can't trade it higher. We're basically just treating this as a range. So if Monday does this, then we expect this for the following days. Monday is being consolidated, relatively speaking, meaning neither side is giving a reversal. So we're just going to treat it as let's wait for one side of this range to be engaged and let's see what happens at that point. Then I can take it from there. It's really just going into the I'm comfortable being conservative in this market. I'm going to be cautious, and I'm fine waiting for one side of this range to be traded into. And we do have that on Tuesday, so we're just rolling that over. Tuesday opens up. We do have that opening price here from Tuesday. Trading higher into that high on NQ, failing to go to that high. That's fine. That can just be considered a divergence because on ES, the correlated pair, we do have a run through that high. And we even have a signature from the higher time frames to get a change in state of delivery here. So that's something that's interesting. So the logic plays out. The only issue when it comes to executing this, meaning I'm going to go and have a trade opportunity, the framework looks good and it's aligning with the type of plan that you would have. It's just not the trade that I'm really looking for when by the time you'd actually have an entry, it's 12:30. It's just too late in the day. It's not really what I'm going to be interested in. The volatility, it's again one of those things, the news, the volatility, it has that chance to follow through and we understand why this is happening, but this is not really going to be my trade. Nonetheless, you have that logic here and it's just worth pointing out of what your process would look like. Even go to the daily profile. Opposing run, 8 o'clock reversal, trading that expansion to the downside. Just not my personal trade, although I don't hate this. If this was maybe, it's tough to gauge as well with these really large stop losses. We look at NQ, I think it's, we have that same issue, 220 points. It's all relative speaking, but it's really tough. So that there, I'm not taking that trade. I think on a normal day, that's a really interesting one, especially getting these signatures on the higher time frame. But I'm just going to roll that over into the next day, saying, what did Monday and Tuesday do? And what is that telling me about what I should be really planning for on Wednesday? And this close on Tuesday was weak. It held. So running out that previous day high, this is a relevant high because we don't have anything else near it. So running out that high means something. And then we have, just like I showed before, change in state of delivery. And then I would be expecting trading away from a protected high into failure swing lows. It's a really great framework. I really like trading ranges like this. So that's 100% what I'm going to go into Wednesday looking for. And that's what we were talking about. The only issue is we go from framework. Daily framework is great. That's what we have. I can mark out invalidation points as well if I need to. Ultimately, I'm going to use the entire previous day range to say next day we should stay below that level. The development itself, we need, okay, we have daily framework, check that off. But next step is daily profile confirmation. That's where we take an idea to something that we can actually look to trade. And this is the one thing I mentioned where it 100% we should be looking to the lows, but the development of this daily profile is not really there. And it's going to make this super tough to actually get on side with. And that's what bails you out of this type of market, where the first thing I'm noting is running out the lows, going higher, and then we drop off. If this is where I'm really getting into the charts, the thing that I have an issue with is, one, if we go down, when I'm looking to trade in here, I'm pretty much thinking, I'm bearish, but is this a high that I'm ready to trade away from? And we have these failure swings off the highs on both ES and NQ. So not a protected high. I don't like that. So not great structure. That's really the first thing. No clear continuation signatures on the higher time frame. So one, again, nothing to get on side with. But then also there's the question of, these are failure swings. Can we come back up into these highs, create a New York reversal, and then go lower? It's the volatility. It's kind of a factor here, but are we going to trade 500 plus points to the high after already wanting to see price go lower and then start trading to the downside? It's not really the type of development that I'm looking for, and it's not the trade that I want. I think even if you were looking for that, it doesn't offer you anything to enter on. but it's a very low quality daily profile. And you can see there's just no continuation signature to even put yourself on side with this. And then that news comes through, and I wouldn't expect anyone to be trading this. This is external factors that we do not see, and that comes and hits the market. And the day's over pretty much at this point here, where I'm not interested in trading that to the downside. But through process in this, you should be finding zero trades, even if you were looking to these lows, which is the logical thing that we're looking for, getting down into these lows. Not offered, so I am going to let Wednesday close. I'm not going to chase that news, this driver that hits the market. I'm not trying to assume what should happen next. This doesn't make me interested, so nothing for me to do with this. I'm just going to wait for Thursday's open or Thursday's trading to see if what the previous days did will offer me anything of interest. And again, we're working with this recent price action. We still have these failure swings off the lows. I'm aware of that. But you're pretty much going into this with previous day high. I don't like to set, it's with this type of candle. I mean, I think this is a record setting candle. It's insanity what we had here. So 15% rally on indices is actually absurd. It's truly absurd. If you haven't been trading for a while, that's very insane. But I'm not going to see that and then go into the next day with a very established plan, just because I've never seen a day like this. I don't know what should be following up on that. So I'm just going to be going into the New York session, seeing what's developed. And I know that previous day high is meaningful. And if we're going to do a continuation, well, then the daily profile should show that. And, is it even worth, it's like the question of, is it even worth marking out 50% of previous day's range because the range is so large? It's one of those things where it probably doesn't make sense. But by the time we get to the New York session, we have a run on previous day high. So that's a relevant high. We have run on that, even a divergence here with NQ, and a potential continuation to the downside. But I had mentioned when you're looking at ES and NQ here, you're going to need to wait for the open regardless. It's not really an option with ES and NQ, because if you were going to short this, let's just imagine we're sitting here going into the open. One, you have a failure swing off the high at this point, and off the lows you would need, even if you're going to long, it doesn't even matter. You have to react to this development. We would need to come down into that low and then manipulate to then go higher. So you have to be waiting for the open in this case. This high we can't position into because we have that same thing here on NQ. Failure swing highs. So where would you can't enter in here, and then where would you place your stop loss? You're not going to place your stop loss at a failure swing high. That doesn't make sense. We would not do that. This was at this point where I was leaning to see that continuation in the 8 o'clock candle, but the only place you get that offered is on YM, where we have basically the exact same thing. This is one of those cases where YM is basically doing the same thing as ES and NQ, which is not always the case, but here it is. You can see the framework is basically exactly the same, where I have a run on this high, 7-hour daily profile, 18 reversal, and then we look inside the 8 o'clock candle. At that same point, we don't have failure swings. We have a run on this short-term high. That there allows me to define a stop loss, where I'm not going to be guessing where price shouldn't go. I know if price is bearish, it shouldn't return to this high on YM. So that gave me the opportunity not to scale in fully, but to put a partial position on in here and then place my stop loss at this high on YM. And then that full context after the open comes through on ES and NQ, that's giving me that final confirmation, that final confidence that I can then add more to my position. That's exactly what I was looking to do and was able to do. So positioning in here on YM, if we go to the 5-minute, we're also pairing this with CPI. You can't trade before 8:30 anyway, so this is all context that we're getting. 8:30 comes in, it almost looks like it's not even there, just because the volatility generally in the market's so high. This is still like a decent CPI candle. It's still pretty meaningful. It just doesn't look like it. But CPI runs into a high. That's a confluence. So volatility driver paired with a short-term high, closing below. the series of up close candles. That's a continuation signature after 8 o'clock. So let's mark that out. And just think of the logic here that I'm trying to use when we think about the daily profile. 8 o'clock opens. We have an open, a high into a short-term high. That's confluence. And then we are expecting that the wick of that candle has been placed. And since the higher time frames are suggesting that this 8 o'clock candle should expand lower, now in this leg of the continuation, we're looking for our continuation signatures to add more to this. So 1 here, that's my first initial entry. Not full, because I want to be a little bit more convinced with ES and NQ through the open. The open comes through 930, breaks price lower, and then doesn't manipulate that low. We get a new 5-minute up close candle. Close back below, very clear, good signature. This here is where I take a full position on. So if we think about how this works logically for just a position management perspective. So I entered in this candle here. Let's say that's my average and this is my stop loss. We'll do this in red. When I take my first position, my stop loss goes here. When we get a new continuation signature, once I add more to that sell position or I sell more, my average gets bumped down. But at the same time, a new invalidation point is created. So my stop loss also gets moved down. So now I have a full position on with less realized risk if I got stopped out in this position because my average is getting trailed to that new invalidation point. And the same thing happens again here where we get up close candle, close back through. It's even clearer on the 15-minute. When we retest this, getting back into it. This here, taking another position. That again, when I add to that sell, it's going to bump my average down here. And then again, I'm going to be trailing my stop loss down to that new invalidation point because up close candles in the continuation lower should be respected as price goes to the downside. And again, I have a larger position on, but that point range, my average is not down here. My average is all the way up here. So I have a larger position on. If price did come up and stop me out, it would be a smaller loss than I would normally take on any full-sized initial entry. So that's the logic behind taking a pyramid like this. And I could have even, if I really wanted to, at this point, I'm more interested in getting out of this trade. But again, we have these up close candles, close below. I could, if I really wanted to, sell again, move my average down, stop loss goes here. But I'm already in a pretty good move, and I didn't want to do that again. But it's very possible. That's the logic that we're following. And as it starts to break lower, I just started scaling out of that position. So buying back as it trades lower. And I had mentioned in that video that I put in the lessons section, I'm not going to trail my stop loss fully with a full position on, or even a position that's large like this. When I'm already past my 2R, I'm in profit with a larger position, I'm going to be scaling into this weakness. So I don't want to have this on, and let's say I have a stop loss here. Like, I'm not going to hold this full, be down here, not scale anything, and it comes all the way back, and then I get stopped out here. Sure, it's in profit, but you lose so much value on that trade. So I'm looking to scale this out as it's breaking lower, breaks down, buy it back, breaks down, buy it back. And then once it gets to a point where I'm like, this is more than I needed, it's overextended, that's where I start trailing my stop. And this pop here took me out of that last contract. And that's the end of that trade. So when I get trailed out, by the time I'm trailed out, I've already got my scales off. I'm not getting trailed with a full position. So that's really a little bit more in depth to that trade management. This type of scenario is insane when you get it. It's not always going to be offered because you're going to have trades where you take an entry, let's say you entered here, and it just breaks down. You don't have an opportunity to build that up. But when you get something like this, it's really building up a one winning trade to be more than you would usually get on a per trade basis. So I'll see if there's any questions on that. Yeah. So when you got to your trade on YM, did you position less pre-open with the understanding that NQ could have manipulated and then taken a long position to flip your trade? I'm aware of that. So I'm doing that more in the sense because yeah, ES and Q still have those failure swings at those highs. I am leaning in one direction, which is why I'm willing to put that position on, and YM has everything I'm looking for. But I'm open to that potential of if it doesn't work out and maybe I jumped the gun on this, which I didn't feel I was, but in the case that happens, then I don't take a full loss. But I'm also willing at that same time, once I get full confirmation from ES and NQ through that open, which to me is really this signature here where we're not manipulating that low, we're creating that new continuation. That's where I'm adding full on YM at that exact moment because I just got full confirmation of this. And then I'm adding as it breaks down. So, there's an element to that of, my level of confidence, but also I'm pairing it with what ES and NQ are doing because these are the main ones that I'm pretty much always watching. So that's definitely a factor into it. Let's see. That evening, I was thinking of shorting because it was expanded so much during the day. Couldn't wait for the wick to form. Yeah, if you're talking about early on Thursday, yeah, it would have been tough to get positioned up here for sure. What do you mean by average here? So for your third pyramid entries, your stop loss, go to where the red line is. So average means, so like if you think about this, when let's say I have 50% of a position on, we'll just go general here. Think about when you enter an initial position, let's say I get filled at this level, it's going to show at that price level. So this here, let's say I took 2 contracts here. That means you got your average is at 258, 2 contracts. If you buy or sell again down here, 2 more contracts, your average is going to get bumped down. Not all the way because you have some position on up here, but it's going to get bumped down closer because you sold lower. So that's your average. It moves as you go. And then my stop loss on my full position gets trailed because while that average moves down, so does that invalidation point. So I'm trailing my average to the invalidation points. When you scale into your position Thursday, by the first initial entry, did you go break even first before taking your second pyramid entry? So the entry is risk free. I would say it goes break even, but not in the sense that like I'm not intentionally moving it to break even as a level. It just happens to be that. So an initial entry, I'm only trailing it because that's a new invalidation point. I'm not jamming to, so there's a difference between like, let's say this, where you take an entry, price moves below your break even. Let's say that's your average. And then you just jam your stop loss to break even. That's what we don't want to do because you're not trading the market there. When my average gets trailed down here and I move my stop loss, I'm technically getting close to break even there, but it's not because it's break even's the level. It's because there's a new invalidation point in the market. I'm going to put my stop loss there. So there's a slight difference in what that means. A few questions for the pyramiding. How much do you put on for every consecutive entry signature, assuming on a regular day you would just put on 100% of your normal positions on that first trade? Would you then add 50% of your previous position size per pyramid? So as it gets lower, I'm going to add less. So that initial was my largest. I would say it's about 60%. The next one is getting full position on, and then the ones following that are more like anywhere from 40 to 20% of my normal position size. And I'm also doing it in consideration of the more that I add, the more that's going to drop my average. So like, for example, if I took 10% of my position on here, right, and then I enter again down here 90%, I mean, like we enter here, that's not going to draw my average here. That's going to draw my average, right down to this point. So I'm doing it in consideration, especially this entry here where my trailed stop loss isn't changing too much, I'm not going to double that position because then it's going to drop my average really close. I'm trying to trail that average somewhere around these invalidation points. So, and as it keeps continuing and it's going in my favor, I'm not going to add more and more to it because the move is starting to play out. The initial entry short on 5 minute has a massive stop loss. Can you talk more about that? Yeah, it's a very wide stop loss. It's just you don't really have another option. These are all pretty wide stop losses. All of these, even this here is really wide. This. So from here to here, here to here. It's like one of those things where if you're going to trade this market, you have to adjust your position sizing. So yeah, all of those are very wide just because of the volatility. Also, are you taking 50 to 75% off once each pyramid hits its own 2R? I wasn't really viewing it as, it gets really difficult to understand like the risk to reward that you're getting because you're moving your average. It's harder to calculate your risk to reward. So once it starts breaking in my favor, I'm just viewing it as taking this trade off when I feel it's necessary. So I wasn't really thinking in terms of this entry hit a 2R, now I have to scale. This one hit a 2R, now scale. This one hit a 2R. It was more just about managing this leg of price. Let's see, why was yesterday high a relevant high? It depends which high we talking about. We're talking about this here, running that high. Looks like you answered that question though. For your third pyramid entry, are your 3 stop losses all where the red line is? Yes. So I trail my stop losses fully. So I don't have stop losses at different points. They get fully trailed. So by the time my last one was on, it was on this high here. So trailed. At some point you said you wouldn't bother positioning smaller size than normal because it signifies lack of confidence to begin with. Yeah, no, it's more in the sense that I wouldn't take an initial entry that I wouldn't consider scaling into. Like I wouldn't put on an entry 50% and then just let it run out because that doesn't make sense. I'm really doing this with the intent that I'm ready to go into a full position. So I wouldn't like take that entry, I don't know, half size and then not do anything else, just let it run out because that just doesn't really make sense to me. But if I'm doing that with the intent that I'm going to continue adding to it, then I see it as my plan is getting a full position on. April 9 was shorting the 10 a.m. candle, but soon as 11 open. What's April 9th? Was that Friday? April 9th, Wednesday. 10 a.m. on. I mean, yeah, I mean, this day, like I mentioned, not one that I'm too interested in, but even if you were, it's YM. I don't know if it makes a difference, but it's tough there. It's close. Yeah, I'm not sure. I don't know if you shorted like around here. But yeah, I mean, I guess if you were looking or if you were still interested in this at that point, then, you know, maybe there's some potential if you're on a 5 minute to put on an entry. That was more of the daily profile wasn't aligning for me, so I didn't really get past that step. Take a look at NQ. Might have been ES, it looked weaker. On Wednesday at 6 to 7 a.m., we had a good daily framework to go lower. then put in an initial reversal to London. If we were to get that continuation signature from the 30-minute, is that something you would have took? Let's see. Yeah, so Wednesday looking to the downside. This here. Yeah, so this is, I guess this is more of just a visual thing. This would have been, I mean, you can't really, the short wouldn't make too much sense because we leave behind failure swings, but if there was better structure on this, then yeah, I mean, if you get an entry at, what did you say, 6 to 7 a.m., a 30-minute continuation, like that's going to be a valid entry. If it would have to develop just differently. I mean, one, if even if you were looking at something in here, leaving behind the failure swings, uninteresting. I also don't like when we run out that previous day low, the intraday lows, and then we just expand higher, creating this back and forth price action. I don't like that, but nonetheless, it wouldn't really be offered. You know, if this opened up here and just, you know, stayed above open, that came through, you got a 30-minute continuation at, you know, 6 to 7, then yeah, that's 100% going to be a valid entry. And honestly, that's, you know, getting the 30-minute 6 to 7 a.m., that's like the sweet spot for positioning prior to the open, at least for myself. Yeah, stop loss, moving to previous day low. Yeah, no, it's tough to gauge the volatility. It adds a factor that makes certain judgments a little bit more difficult. 100%. Like even with this trade on Wednesday, that's a really good framework to short, but it's like how far can it move from the open, and by the time it's 12:30, is there enough volatility left for it to then continue lower? Like on a normal day, I'd say 100% no, but you just don't really know with these things. So honestly, if you're staying out because of that, I wouldn't say it's a big deal because you're just staying conservative. I will get to what my plan is here for next week. I think it's going to be, it's a little bit tough from where it's at, but I will talk about that. Would I say that's a valid way to pyramid? Yeah, because yeah, you can pyramid even if your first entry is full sized. And like this, for example, will work. I think it's like this is logical, especially if, I mean, your entries here. Like it's really going to depend, like I mentioned, where your stop loss is or your average is going to change. Because, yeah, I mean, when the entries would be like, this is just a graphic. I know this is not an actual price chart, but let's say you entered and your average was here and your stop loss is up here and you sell again down here, your average is going to be, you know, pretty close to that new entry. You would just have to make sure your risk is controlled when you trail that stop loss. But this, yeah, 100%. Slightly scaling it down as it moves in your favor, building up that position. Because by the time you get here, you'd be doubling your size. How do you determine where your target or maximum range would be essential when you want to pyramid so that you're not adding to a near potential bottom? Yeah, I mean, with this one on YM, against with the volatility, it's hard to judge these things sometimes, relatively speaking. You know, I'm positioning up here, which, like I said, you know, relatively speaking, we have more room on that. But on a standard day, then you have to be really considering more of a minimum or where you think price should be going. Like you want to be pyramiding, not where you think price is going to stop. You're ultimately trying to build up that position before it really starts to break away. Meaning, I don't want to take an initial entry here and then be pyramiding at the end of the move as I should be scaling. So it's really just about making sure you have enough room to that target that you're looking for on the day. That would be, the main thing. And also, ideally, you're building up that position before it starts breaking in your favor. That was Thursday. And then Friday, I'll just quickly talk about Friday. There was news here, but it didn't matter too much. This we talked about in the morning. There's nothing to do with this. Even if we were to look at this as a continuation to the following day, first issue is trading really deep back up into that range. So if we were going to look for a continuation, we wouldn't want to see it get really deep back up into previous day's range, which one we have that. So that downside move is not interesting to me. Then also by the time the open comes through, we're not going to long this here because there's failure swings off the lows. So you're basically trapped in the short side is not supported by the higher time frames. The upside is not supported. It would have to go all the way down to this low. It doesn't do that. So you're basically failure swings to both sides or nothing being supported. So there's nothing you can do on this day. This day had no opportunity, nothing really to look at past the open. And I think that's a good thing. There was nothing interesting in here that you'd want to really be executing on. And that's pretty simple for Friday. It's looking at price at open and saying, yeah, my setup is not going to exist in there, and then moving on with the day, which is not always a bad thing when it's like that. So that's pretty simple. But I don't think like these other markets, to me, I'm probably, I'm not messing with these much. Even they don't look that great. Yeah, they're all acting and reacting to this news. All markets are being affected. So when it's like this, I'm most likely going to be on indices just because I'm more familiar with that. And then these other markets, until they really calm down and start trading as they usually would, where I'm going to find these simple, high quality setups. I don't want to be thinking too much in here. I'm not really going to be paying attention too much on these. So yeah, I wasn't even tracking these other markets. I mean, some people may have questions on them. I'd be happy to answer, but I did not trade anything here. Decided just going to focus on indices. Only thing you're confident with. Hone in strengths and diminish weaknesses. Yeah, others. Yeah, the 9:30 open is honestly a big one. That it's just such a simple thing when there's so many days where it's just wait for the open, and that's going to give you the context you need. We run into that situation a lot, and you don't really get that luxury on other markets. And even right now, like there's not going to be much anywhere else, in my opinion, to be trading. Like just cycling through these, I wouldn't find a single thing in this with the way it's trading. Let's see. Okay, you found a trade Tuesday 9:35 on EU 5 minute. Checked all the boxes for a trade. Played out well. Let's see. Tuesday euro. Here we are. Let's see. So this is Tuesday. Depends. I'm already seeing this here, but we'll check. So not a divergence with high or low, low or high. You do have it. So, I mean, you do kind of have this with see, that's the first thing that I would struggle with slightly on euro is previous day low is lacking that protected swing because we're trading really deep back into that. That just hints that there's potential failure swings here, which we can take a look at a little bit deeper. So yeah, this here would be difficult for me to trade Previous day wick. Yeah. So to me, I would view this more as a failure swing to previous day low. So if there was, potentially we had a run into that, I think that could be a little bit more supported. Oh, you shorted. All right, let's see if we can. Let's see. Even if we were short here. So now I would be looking in, is there anything here off the highs to be supporting that move lower? I'm seeing a little bit of this here. So this is the high that you are trading away from. My only issue, we can check dollar. All right, we have this similar thing with failure swings to the highs. And it's just that, we have these here. When you're trading away from this high, you're assuming that this traded into something to the left. That means, we should not return back here. And I just don't see, especially with the failure swings, it makes it difficult to really justify, is it up close candles? Should it run at a high? Is this high meaningful? It's just not very clear. That's what failure swings bring the issue. So I would be a little bit uncomfortable in here. I mean, you do have the daily profile, but if I'm looking slightly beyond that, it would be a bit tough for me. This is even more so like that neutral price action on euro. We're talking about Friday. If we got a continuation signature straight off this reversal, it did not trade so deep. Is that something that you would have looked to trade, or was your bias for shorts not strong enough? Oh, that there. Yeah, so if we're looking, is that Friday there? It looks like it. So yeah, Friday on NQ. The only issue with the short side, we start on higher time frames. That's where my issue comes from. So you're using NQ, but it's the same on ES. Trying to follow that logic of the weekly range even. Thursday reversing, failure swings off the lows and continuing from that reversal. But if we're trying to find our invalidation point, we're really already through that. That shows we had an aggressive close into Thursday. And we're also above that level. By the time you're looking to enter, that's a bit deep back into our invalidation point. That makes it less interesting, but similar to what you're mentioning, we're almost creating these failure swings that you're trying to short away from. So it's slightly uninteresting to me. But if we start from that first step of higher time frames, it's tough to get past that in itself, to start thinking about, what the daily profile looks like to the downside, because we first want to have that support on the higher time frame. So hopefully that makes sense. Have any chart examples of days where pyramiding could have worked? And also, how do you balance out the rule if not managing a trade before 2.2R to 1.5R, which is set in the course, and pyramiding, then trailing the stop to a previous position to the new invalidation point? So I could definitely get, or I would even try to find those. I don't have them like off the top of my head or stored anywhere. But, when we get to not managing a trade 2.5 to 1.5R, it gets like that rule loosens up a little bit when you're pyramiding, and it's just more difficult to track because your average is moving, your stop loss is moving. It's more dynamic than having a static entry, and then you know exactly where you're up 1.5 to 2R. I mean, you can even take it at that point. I mean, you want to be trading the chart ultimately, but let's say you've pyramided 2 entries and you're in a larger position, and your risk never went above what you would usually risk per trade. You can even take the dollar amount and say, I'm up X amount, and that's 2X what my initial risk would ever be on this trade. I can consider scaling this out because I got the dollar amount that I'm looking for. You can do that, and you don't need as much of a move to capitalize on because you'd be in a larger position. But it really depends on how you'd want to approach that. I think still being tied into what price is doing. But you could judge it in that way, meaning my dollar amount is up 2x what my initial risk would ever be. Now I can start managing this trade as I need to, and then I'll start looking into price. Should it stop here? Does it have more room? What should I do at that point? That's how you can approach it to make it a little bit more simple. Just using the dollar amount. Let's take a look at next week. So this is nothing, pretty much. No significant news on the week. No high impact news. Core retail sales, 8:30 on Wednesday. Low impact, so it will not, well, not that it won't bring volatility, but there's no rules around it. And the same thing goes for Thursday at 8:30. So both of these are considered low impact, meaning if I need to, I can hold open positions through them. If not, I can use these as volatility drivers, meaning let's say on Wednesday or Thursday, I want more context from price, then I can allow these to go through and see if that offers anything else. This on Wednesday, I am not even caring about. So 1:30 Fed Powell speaks, it doesn't really matter to me. I would just be kind of forgetting about that. Yeah, Thursday. I don't think does it affect the market? I don't believe so. We have Easter on Sunday. I could take a look at that. Let me see. Sunday is Easter, I believe. But let me take a look. I'm just gonna do it on my phone. It would show up as a bank holiday on here, or it should if the market was going to be closed. So, yeah, April. Okay. Well, we have, is that going to be this week? Friday? Good Friday? Let's see. 25. Yeah, so that, I don't know why it's not showing up on here. 18 Friday. So there's potential Friday might be observed as a U.S. holiday. It should be showing up on the calendar, but it's not. So if that does impact it, honestly, if any day is going to have it, Friday's the best day because it's at the close of the week. I don't like when the opening days are impacted by that, or the middle of the week, even worse. If Friday is going to be closed, which Good Friday looks like it might be, then that's fine. We'll just update on that. Why is it not? I guess it's not technically a bank holiday, but I thought it would still show. Yeah, let's see. Would you expect that your entries are in the 6 to 7 a.m. time frame or post 9:30 when there's no 8:30 news? When there's no 8:30 news, I don't think that really impacts it much. Like if we're talking low impact news, it won't really change how often I'm going to get an entry before or after the open, just because, obviously with high impact news days, that's different. If we have CPI or NFP, I do find usually I'm going to be positioned after the open just because you only have an hour for price to continue working after that release hits the market. So, with those type of days, I'd probably usually find myself, obviously I'm not going to be positioned before, but even before the open, I'm likely going to be after that on these high impact news days. These ones here, it doesn't really affect price very much in the hours prior. So if there is one at 6 to 7, I'd still take it. But also if I have to wait for the open, then I will. Yes, I think it is closed on Friday. Looks like full close too. Yeah. And then we won't have another one until end of May. Yeah. without 8:30 news, you would want to avoid entries right before open. Yeah, I think even without news, entries right before the open, we're talking within, even within, sometimes within the hour, but 30 minutes, 15 minutes before, those are really tough and not very common. Like if we're right before the open, then most of the time it's going to make sense to wait, just because the difference between, I mentioned this last stream maybe, but the difference between entering at 6 a.m. versus 9:15 is that if you're entering at 6 to 7 a.m., most likely the market, if you're still in that trade, it's likely working in your favor. So it's breaking away from your entry and your stop loss. And by the time that volatility hits, you're still assuming a continuation, but you have room for it to get a little bit volatile. Versus you enter at 9:15, where is price going to go right before the open for 15 minutes? It's probably not going to go very far. It's unlikely. So that volatility, if it has that, it doesn't immediately go in your direction. There's a decent chance that that can pull you out of the market, or you're just going to know that you're right or wrong extremely fast. So I would say that with and without 8:30 news, 8:30 helps because that could be driving price before the open, but in a normal day, like, it's tough to enter right before the open. Yeah, I can try to gather some, but even for myself, like, that's a skill that I continue to try to focus on. I think there's opportunities where I see it and I don't take it, but I try to continue to build up. Honestly, that's probably one of the most important skills, at least for myself at this point. So I can try to find, I would definitely see or go through other days maybe that you did take trades or you didn't, and see how that would have worked out to get some more exposure to it before applying it. So like I mentioned, there is that the risk isn't really in the dollar amount. I mentioned that in my YouTube video today. Did a little breakdown on that. But the risk isn't really in the dollar amount because you are controlling that through trailing your stop loss and only adding a certain amount. The risk is in getting stopped out prematurely. So if we look at like YM here, let's say I were to have taken an entry here and just let this trade play out, versus let's just say I didn't touch that position. But if you try to pyramid here and you do this and you trail that stop loss down to this point, trying to add to that, there's always room. We don't expect it, but the market could do something like this: run you out, stop you out fully, and then break in your favor. Where if you never touched that initial position, well, then you could have capitalized on this. That's the risk of pyramiding, and why you have to be cautious with it. It's not a risk-free thing, because getting stopped out on a winning trade is not risk-free. You just missed out on this move. So it has to be applied at the right time and correctly. So it's a skill at the end of the day as well, doing it at the right times. So whether that's through, I don't know I think you backtest, if I remember right, or just going through past chart examples, like, I think that's fine. Going through other legs of price that you were trading and seeing where was that opportunity, where did it work, where didn't it work, what could I have done to really build up a position. But understanding, like, that's the risk. Nothing, no decision you make in trading is going to be risk-free or without potential consequence, because you're making a new decision every time you add to that trade. You're actively managing that. So every new position, every new decision, you have to again be correct on. So important to note those things. But yeah, let's get into, so looking at indices, the market's still hectic. Again, I don't really know how this is going to open up. I don't know if it's going to cool off like it should. We see gap up. Honestly, I'd rather it gap up, honestly. But seeing what it does, the structure is not great here. Really isn't. looking for where something could develop. These lows, failure swings. These lows, failure swings. We're almost in the same position of the reason why I didn't trade on Friday. So if Monday was trapped in here, we're going to be rolling that over into Monday and Tuesday. So I'm pretty much treating this right now as ranged price action. This low, this high. And if Monday does this, then Tuesday does that. I'm going to be focused on these 2 points. And it's more of that uncertainty of let's see what this volatility does. Let's see how Monday opens. We got to vote for gap up. So let's see. Deals with iPhone. So honestly, if it gaps up, then my focus is going to be, up here. That's where my eyes are going to go. Because I don't see too much to the left. If we gap up, even Monday closes above this down close candle, that might offer support for framework. Yeah, gather data, pyramiding worked, or if it didn't, right, you'd have to compare. You could even go into your past trades and see the difference there. What time frame do you normally pyramid since price is fractal? It's going to be similar to where I'd take entries. So indices, New York session, it would be 5 and 15 minute, especially if it's being offered. That's like ideal. But 5 and 15 is where I would be if I'm going to pyramid. My entry time frames won't really change much. If I'm going to pyramid, it's not very common to get this, but in the London session, 30 minute, 15. And then if we're getting into New York, most of the time it's going to be 15 and 5. And I'm going to resort to the 5 if it's being offered. Because again, you look at the 15 minute here, you wouldn't have, if you were staying on the 15, you wouldn't have anywhere to really enter because the market's moving fast. 15 minute can sometimes be a higher time frame. You get the opportunity here, but I'll refine it down to a 5 when necessary. Those 2 time frames in the New York session. That's where my eyes will go. All right, we'll see you later. But yeah, it's pretty much going to be, see what do we have? Yeah, a couple hours. We'll see where it opens up. And you can almost see price ranging, even on the daily, looking at this. Other markets, am I going to look at it next week? Look at that recovery. Jeez. It's unlikely. Do you ever deviate from your model if another entry model presents itself? So entry model is a very small part of what I'm doing. So, I really only look for what I know. Like, I don't really think of signatures outside of the things that I use. So if it's really in any step of my model, the entry model is, it's going to be what I look for. But even any step outside of that, if it's not within what I use, then I pretty much just ignore it. I just like discount it as even real to me. So entry model, like sometimes my entry model may look like one of those two. Sometimes it won't. But it's really just focusing on, what I'm looking for, which is usually just going to be opposing candles paired with some type of confluence in the continuation. We're running a short-term high, a divergence, a volatility driver getting closed through, and that's where I will usually be positioning. Adding videos to the model where you go through trade examples I get that live stream. I get that these live streams, as well as your trades channel, is meant to fulfill that, feel like a more structured video. That's part of the course would be more beneficial. Maybe a video for a trade in each daily profile, video for a continuation, reversal. Yeah, I can, maybe I'll just stack those up as they come, or I can look back in other ones. But yeah, like the videos that I send in the Discord or whatever, or the way I explain them here, I can try to see as I go, or I'll look back in other examples of those different variations. So it would be what? It would be reversal day, continuation, and then basically 3 daily profiles. That would pretty much be general framework, right? I think. I mean, there's always confluences that come with it, but what's that? Yeah, no, I think that's helpful because I think sometimes the content seems daunting when in reality, like in application, the basis of it is not all that. I like to think it's not too overwhelming. Seeing it all together. Yeah, so I'll definitely look into that. See a confluence for entries. We can use opposing candles. Do you ever use the wick of the opposing candle if it's small, if it doesn't tag into the body? I see that sometimes it's like that for a continuation. Do you ever use the wick of the opposing candle if it's small? Depends what you mean. Like if the entry doesn't retest, is that what you're asking about? Like for here, like this not retesting in here? Or are you talking about the opposing candles, like this wick or this wick? The entry or the ones you're framing off of? You can kind of get this. Yeah, because it would really depend. So I mean, just kind of for general sake, if this after the close through didn't retest, I would just be selling the opening price. And then on the flip side, this here, I wouldn't really be concerned with the wick as long as the candle body is defined. That I don't care too much about, like a small wick on the other side of this candle, but I'll let you explain it a bit more. Yeah, these start on 1 p.m. EST on Sunday. I don't know how Discord displays it on your side, but I would hope that they adjust it to your time zone. So I don't really know. But yeah, it's 1 o'clock EST. It's adjusted, yeah, as it should, yeah, which is good. So I know we have people in all different places. See, I'll wait on this here. That's framed off of this. Oops. Trying to think of. Yeah, no. If you're newer or you're just learning, yeah, it's like hard to know what to ask because you're just in that stage. But main thing new traders struggle with learning my model. Um, I would like the main thing. Mm, I would just say maybe sometimes not skipping certain parts, but I mean, my model is always based on the daily. So, like, not skipping a step where you don't go to the daily profile unless you have an idea of what's going on in the daily, and you don't think about an entry until you have a daily profile aligned with some type of framework on the daily time frame. So skipping the steps would be definitely one of them. And then the other may be, and I think this is general for everyone because setting a framework on the daily is usually pretty simple. In the daily profile, when you have your invalidation point, especially if you're trading the continuation day, it's more simple to know if you should be getting confirmation in the daily profile. But then when some nuance enters, it's when, the entry part of things, entering too early, too late, using the wrong time frame. I think at first the easiest thing you can do is, but instead of introducing too many factors, is if you're trading in the 1 o'clock 7 hour candle, use only the 30-minute and the 15-minute. Demand something extremely clear. If you're trading in the New York session, so after 8 o'clock, favor the higher time frame, 15-minute, and only drop to the 5 when absolutely necessary. And if you want to take it to another level to make it even more simple, if you want to remove more judgment at the start, is wait until after 9:30. These are things that you can do at the start as you build experience, because just with experience comes some things that you can bend and you can take on more interpretation without having to like overwhelm your brain. So I would probably say, that's important, because the entries, it gets a little bit less objective in a way. Roar here, Bryson. Definitely Bryson. That just reminded me I want to watch that. We got to root for the Americans. Here we go. If we're wanting a continuation signature off an opposing candle, but we only tag the wick. Okay, that's the other thing that you're mentioning. Yes, so we'll paste this on here. So I think we even have an example from, this is what we're looking at. So body of the candle, not tagged, but the wick was. So we do have an example of that, I think, from this leg down, where we kind of, not fully, but I think even this is the idea of, we're not tagging into the body itself. This is an example where we tag into the candle body and then go lower. But if we imagine this, like I'll paint that scenario for you. If we broke down here, didn't tag the body itself, and close back through, I would still be comfortable with taking that entry. That's just where you return to, like, if you are trading that entry, you're really just using the basis of a close of an opposing candle. There's really no other confluence you're using in that entry, or in this example here that you put. Right? If you're taking this entry, you're not really working with any confluence. If there's no volatility driver, you're not running on a short-term high. You're not retesting into the body of that opposing candle. So you return to, if you're going to take this entry, you just need to ensure that this candle body is very well defined and it is a large enough range to protect your stop loss when you take an entry here. That's like the baseline thing that we look for in opposing candles. So if you're going to take that entry, it's still valid. It doesn't have to come back and tag the body, but that's what you are going to be leaning into if you take that entry. I'm comfortable like this, for example. That's what I'm leaning into. There's no confluence here with this entry. It's just very well defined. I mean, I'm also understanding, right? We're not manipulating this low, but we're just using, this is a very well defined up close candle. We clearly closed below it, and I'm assuming that should continue. And my stop goes to that high. It didn't tag into, these up close candles from before, but it still is valid in my eyes. But like, let's keep just drawing out scenarios here. Let's say we close below this. Is that up close candle going to protect my stop loss, relatively speaking? No, I would not feel confident in putting, entering here and putting a stop at that high, because you don't have the baseline rule of having enough range on that opposing close candle to protect your stop loss. It's clearly less defined than these here. It's a small up close candle. I've noticed if a high or low is swept and it's shallow, I should possibly look for a deeper violation of that point. Price will trade away and make a more aggressive move higher. Is there a better way to identify this? If a high or low is swept and it's shallow, possibly, okay. So if you're talking about, let's say, like a manipulation of a low or a high, like let's say you're basically making this claim of, that's a shallow manipulation versus a deeper one. I wouldn't say, so it's one of those things where manipulation, we really just need it to go through that point here. But if you're, and this is why we look at the continuation signature, so even if it was really shallow like this, you're not entering right at that low, or you wouldn't be assuming, this low. You would be waiting for the confirmation, the new continuation signature, and then you'd be trading away. You could, if we were looking to trade reversals, then maybe you would be a little bit more concerned. But I would say, regardless of how deep or how shallow it is, it's still technically a valid manipulation. If we go into it and then just immediately start turning in the other direction, that's valid. But the filter should be, we're waiting for the initial reversal confirmation and then the next continuation, because it's breaking away far enough from that point. It's like we've even had scenarios where, like, what's a super extreme example? When was this from? It was recent. It's just hard to tell from this here. Right, this is like a super extreme example, but even this, right, that low, relevant low, this was a divergence off the lows. That is super shallow, but you're not entering at this point. You don't have to assume if that's enough, because you wait, and then by the time it breaks away, I'm considering that valid. That is a valid manipulation. You can trade or frame that higher. So if there's ever any concern for you on that, you see that maybe as a repeating pattern, just wait for it to break away more, or just demand a better confirmation of it. That's what I would say. But just like anything, I mean, I think visual cues matter in trading when we're using charts like this. Like if you want it to look a certain way because you just have experience that it tells you that it should look a certain way, then it does mean something. At least that's how I do things. That's something I get wrong, trying to enter too soon rather than being patient, waiting for the extra confirmation. Yeah, so for entries, that's one of those things where entries can get tough. It's usually almost never worth it. That's why the continuation signature is beneficial, and it filters out a lot of false reversals or times where you would have gotten stopped out. It's like catching the highest high or the lowest low. Usually the payoff for that isn't that big of a difference than just waiting for the continuation. So it's not like it's going to offset the times where you get stopped out prematurely or unnecessarily trying to catch the high or low, or being on a super low time frame. Like, the market's not going anywhere. Like, I'm entering here on this day. I didn't enter up here or even here. I'm entering all the way in this continuation. There's plenty. You just need that piece that you're looking for. So yeah, there's definitely intention behind waiting for a continuation entry. Confidence to mentor. I mean, I guess, well, I was doing the public stuff for a while. It's really just like another level to, if you see your public things having impact, then doing things like this is way more involved. So you just assume that you can have a way bigger impact. I mean, because what I was sharing content, answering people's questions for, I don't even know, 2 to 3, not 3 years, probably 2 years before doing anything like this. Found that I become most impatient regarding entries if the target that I identified is already pretty close and I want to make sure I have sufficient risk to reward. Yeah, so I mean, there's a distinction between like impatience and logically getting yourself on side because you know you need to get on side there or the trade is over. Um, you kind of have to. So if it's an impatience thing and you're forcing an entry, then of course that's not something you want to do because that's not going to result in anything positive. But yeah, if the target is close and you don't have sufficient RR, that's, yeah, I mean, that's where things get more difficult. That means you're in a likely a less ideal framework, meaning probably that most of the move is already played out and things do get more complicated. That's where you don't want to be, dropping to really low time frames, creating those signatures, or putting yourself on side where you're not confident. But like, the thing is, if you notice that, like, that's step one. So you just noticed that was happening. Then if you can justify why that's important, like, how is that taking an impact on your performance? If it's a yes, then now you have a reason, and then you just want to move forward with what your plan can be when you identify you're in that feeling to make sure it doesn't result in forcing a trade or whatever it may be for you. Yes, so live streams are recorded. They are in WAP, so that platform that you join through, we hold all our recordings in there. I think you're going to find unlimited content. It's overwhelming. I would keep an eye on your emails. You're going to get a series of emails. One of them will be explaining how to use the video library, because we have a lot there and the way to approach that. So yes, they will be uploaded in there, and every past recording is there as well. And we have, if you go to the events tab in the Discord, so the top of the list that you see, it says 6 events. We have 6 of these going on every single week, scheduled. And then sometimes there's, pop-up ones or whatever. And yes, you're probably going to find, as you can see in my charts, not too much being marked up. Probably only a couple things as I'm reviewing. So yeah, you'll probably be clearing your charts a little bit. How much weight do you give to fair value gaps in terms of bias, if any? So I don't use fair value gaps. To me, a fair value gap, I really just look at highs and lows, and then in the continuation, opposing candles. A fair value gap, like this here, I almost don't even see it. Like this is not really, that could be considered a gap. I don't really see it. I only care, sometimes a fair value gap might be a relevant high. So that's why I just, you might hear me call things differently. Like this was an example of, this happens to be a fair value gap, but all I see is this high. To me, it's just a high. If I were to go down to, you can see it on a lower time frame, right? It's just a relevant high to me. The gap doesn't really play into anything. So that's what I focus on, because not all fair value gaps are going to be relevant highs and lows, but sometimes it will overlap. So on entries, framework, bias, it doesn't really have much consideration for me. Just going to be highs and lows. And then if we're in the continuation, I'm going to be looking at still highs and lows, but also opposing close candles as well. This is another example. That's a relevant high, but it's a gap as well. This is also a gap, but this high is not relevant to me. So I pretty much block that out. I think in here, some people definitely do use them, and there's nothing wrong with it. I think it usually will just turn into highs and lows. It's basically the same thing. Oh, shoot. Oh, wow. It's not good. I just paper cut my finger on my water. Whoops. So we're doing great. But yeah, we're probably nearing the end, but I'll stick around for, if there's a few more questions. Because we went through last week indices, nothing to talk about in other markets, economic calendar, and plan for next week. So all that good stuff. Oof. So you can do, so can you host streams within the Discord? That's what the voice channel is for. With the lens roll, I don't think you're not able to start like a live stream stage, but that voice channel, you should have full permissions to go in there. Like if you wanted to talk live with someone else, a group of people, whatever it was, and you can even share your screen in there. That's what that's for, more or less. So yeah, definitely can do that. The only difference, like the stage, it'll show like in the community there's an event going on, so it pops up for other people. In the voice chat, you can just hop in whenever you want. If the permission should be set. If not, just let me know. What's the ideal scenario for us this week after Monday's close? The ideal scenario, like if it gaps, I mean, the ideal scenario is going to be, meaning an ideal world, meaning you go into Tuesday looking for an opportunity, is like basically creating a reversal signature. Like the easiest thing to trade is when Monday reverses and you trade Tuesday as a continuation. And if I'm viewing this high and low, meaning this high is unestablished, this low, it's treating it as more or less of a range. I don't really favor one over the other, but an ideal scenario is whether we gap or not, trading up into that high, Monday itself reversing, meaning we don't need to trade back there. And then Tuesday, you look to trade the other side of the market. That is the easiest framework. That's ideal. But the reason I don't set expectations is because I can be a little bit more loose in my bias, because I'm able to adjust to what Monday does. Maybe Monday does nothing, and that doesn't offend me because I had no expectation. Maybe it gives that ideal scenario, and then I'm definitely going to trade it. But there's a few ways that price can engage that it's going to create a potential opportunity for Tuesday. So I don't try to guess that, but I do know where the opportunity will exist for me. And then we go from there. But yeah, like that, like I mentioned, a Monday reversing at a relevant level is going to be the easiest thing. That's ideal. Yeah, we got an hour and a half. It's good. Good question. So I'll probably wrap it up there. Like I said, yeah, that range is what we'll be looking at. See if we can talk about it from here. See what Monday does later in the day. But yeah, I'll close off this stream on that, and hope you all enjoy the rest of your Sunday. So yeah, you guys all have a good one.